Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on gold and the miners. Let's start it off with the dollar because the dollar is leading the way to the downside in a big way. Zooming out, this has been the 2017 year so far, lower highs and lower lows. We had this bearish reversal head and shoulders pattern. It played out perfectly and has been nothing but downside since then. So we had a fresh dump today in a big way this morning. Look at that dump on the hourly time frame. Huge move to the downside. Potential bear flag. At this point, it's no longer a bear flag because we've bounced significantly enough, although on the 4-hour time frame, it is still a potential bear flag depending on that pattern that you're watching. So you have to be cautious of that. Look at this weekly time frame. The dollar right now, the RSI at 30, it's the lowest it's been since 2011. That is a 6-year RSI low. That's significant. The daily RSI at this point is oversold as well. It's down in the mid-20s, so we are very due for an oversold bounce, and we don't have any sign of it yet, but we're keeping an eye out for it. So how this compares to the precious metals, to be honest, I would expect the precious metals to be a lot stronger than they are right now, due to this inverse correlation. We've seen a nice bounce over the past 2 weeks, but we were in a downtrend while the dollar was dumping. So gold at this point is still setting a lower high compared to this resistance level of 1258.73. And of course, we're very bullish in the short term. So it all depends on the time frame that you're looking at. On the hourly time frame, of course, we're bullish, higher lows and higher highs, very strong trend, a new higher low just established here. That's the level the bulls want to keep, 1242.61, and resistance is up at 1247.44, and bulls are just looking to keep those higher lows and higher highs alive. But that being said, you zoom out to the daily time frame, and we broke the higher low pattern. This has now shifted things. Whenever this happens on a trend, I instantly shift my mindset to stop from looking for higher lows and higher highs, double top, lower low. Now I'm looking for lower highs and lower lows to be the prevailing trend. So the resistance I'm watching is up at 1258.73 and then all the way up at our double top of 1295.98. So the fact that the dollar is so weak and dumping and that gold is not breaking out is surprising, and it shows me that these precious metals are not as strong as they used to be. There is definitely still some weakness there. So it's been a strong bounce, but it's not enough to change my tune on the weekly time frame. So the weekly time frame, still watching a tightening pattern here, but again, it was the break of the higher low that changed everything for me. So a nice 2-week bounce, absolutely. Bulls have seen a solid move, but unless we break this double top of 1295, 1296, bulls aren't going anywhere. So we can see some upside. Until then, we can see, another 2 weeks of green for all I know, but I am anticipating a lower high and the bears to take control. What's going to happen to gold when the dollar oversold bounce begins playing out and the dollar sees a couple green weeks in a row? Are we going to see the inverse correlation hurt gold then? That's what I'm going to be watching for, and there's potential for that to be the case. So again, time frame is very important here because short term is all bulls, and if you're just day trading these bull miners, there's some nice upside. But let's look at these miner charts, and I've been saying this in the chat room. I look at this chart and I want nothing to do with it personally. I'm not trading these miners right now, so the good thing is my opinion on bull or bear is completely unbiased because I don't care if it goes up or goes down. But it's just way too choppy for me. Look at this red, green, red, green, red, green, red, red, green, green, red, green. It's just all this choppy back and forth. We had higher lows and higher highs, then lower highs and lower lows. So what we're seeing, I like looking at the weekly chart a bit better just because it's a bit more clear, but it's tight ranges. So everybody, the miners were all the rage back when the Fed and the minutes were unknowns and we saw huge moves. And look at these green weeks. We saw green weeks with huge gains to the upside, and we haven't seen anything like that in this pattern where we're just seeing little lower high, lower low, tightening range. And over the past 2 months, 3 months, the range has been so tight. We're looking at 2089 to 2386. So let's call that a $3 range. And that's played out over 3 months. And here on this one candlestick, that was over a $3 range. So this one candlestick had more range than the past 3 months. That's when the trading was hot, and the downside as well. That has all changed. So we will see a break of this eventually, sometime likely in Q3 or Q4. I guess we're in Q3. So likely in Q4. But I just don't like it. It's just not clear. Whenever I look at a chart and I look for a trade, I want nice clarity. I want a clear pattern that I've seen play out before. I want the odds in my favor, and I don't have that on these minor charts, so I skip it and I find other things to trade. So as of right now, as the middle Bollinger Band is resistance, that's a key resistance level that's keeping the bears in control. But we do have some moving average supports that the bulls are trying to cling on to. 2089 is a very key support level for the bulls to maintain. And checking in on the junior minors, for May, we had a higher low, higher high pattern. Now we're forming lower highs and lower lows. Same thing, red, green, lots of back and forth. Swing trades are treacherous here. Day trading only, in my opinion. And the same thing, the ranges are extremely tight compared to what they used to be. That will break eventually, but could play out for months more, just like this. So we are holding the 100-week moving average support. We bounced off that at the end of 2016, bounced off of it again in May, and bouncing off it now in July. So that's 31.55. Losing that level would be a red flag for the bulls. So as of where we stand right now, just based on gold alone, gold bulls are in control. So the bull miners are in control of the short term. You see we have 2 green weeks in a row here on both the junior and the senior miners. But overall, there's this little lower high, lower low pattern over all of 2017 that is keeping the bears in control of the longer term. So again, the moral of the story, short-term bulls, longer-term bears, not liking the trading action, but if it's working for you, by all means, keep doing it. If it's not working for you, take a step back, slow down the trading, and educate yourself on different sectors that perhaps have better volatility for trading and better opportunity. Thanks again, and we'll see you soon.